In this video, I answer the question, what is a stock split and can they make you rich? All right, so a stock split is when a company splits their stock. In most cases, they go from a higher number to a lower number. And what it does is it gives you a multiple of the shares. So here's an example. Let's say a stock does a 4-for-1, or sometimes you'll see it written as 4:1, but it's really the same thing. It could be a 2-for-1, 3-for-1, 4-for-1, or whatever, but it goes from a higher number to a lower number. That's what you want to see. And a 4-for-1 would be, here's an example. So $1,000 stock pre-split, they do a 4-for-1, they divide it by 4. That means it's now $250. Or you could use $100 stock pre-split. 4-for-1 would bring it down to $25. It doesn't make you more rich. Yes, it does give you more shares, but what it does do is it lowers that share price to make it more appealing for retail investors. Institutions are wise. They're not going to essentially pile in, but what happens is you lower that share price, which retail investors start buying more, which naturally drives that price up. Now, it's not going to go through the roof overnight, but it will naturally increase over time. So whenever I hear a company doing a stock split and it goes from a higher number to a lower number, I'm like, all right, that's great, especially if it's a stock I hold, because I know it's probably going to increase even more over time. So we do like to see those stock splits, especially if it's a higher number going to a lower number. Now, let's say we flip that equation. It goes from a lower number to a higher number. That's when we have a problem, and I will show you an example here. But first, let's dive into an Excel sheet I put together to show you what this looks like with your splits. Really simple here. I'll take it column by column. So I have the type of stock split. Again, it can be written as 2-for-1 or like 2:1. But in this case, you've got the 2-for-1, the split number you put here in the next cell. And then what are we doing here? So when we go from a higher number to a lower number, that's when you divide. When you go from a lower number to a higher number, that's when you want to multiply. All right, so let's use some nice round numbers here. Let's say the share price pre-split is $1,000 with a 2-for-1. You can see the math here. It's D2, that's $1,000 divided by B2, that split number. Same thing here. We've got $1,000 divided by 3, $1,000 divided by 4, 1,000 divided by 5. Sometimes you'll see a 10-for-1. That's a really nice situation. You divide it by 10. But then you run into a circumstance like this, a 1-for-10. You take that, in this example, a $50 stock, and you multiply times 10. So your question now is, why in the world would a company want to do that? All right, let me give you an example. Now I'm going to go on a little tangent here, but I'll bring us right back to stock splits. But this example here is Canopy Growth. And full transparency, when marijuana stocks were all the buzz, this was like 2017 or 18, I took like $1,000 and I think I invested in Canopy and maybe one other stock. But what I was really waiting for was when Canada would go legal with marijuana. That was the moment we would know, like, hey, is this industry going to be big or is it really not going to do anything? Well, what happened was when marijuana went legal in Canada, nothing happened. And at that moment I sold. So I think I turned like $1,000 into like maybe 2,000. And that was it. I don't do speculative investing, but I just wanted to see what I could do, just kind of riding a trend. Highly recommend you don't do that. But I had a few friends that were still thinking marijuana stocks are going to be a really big deal. And I kind of walked them through human psychology. And I said, think about all the baseball games, football games, soccer games, or football games, depending where you live in the world, hockey games, or if you're going to weddings, whatever event you're going to, do you think people are going to be looking for a nice cold beer or glass of wine, or they're going to stand in line for pop brownies? I think it kind of answers itself. Well, I kind of walked them through human psychology at the moment. I'm like, people are not going to stand in line for pop brownies. On a hot summer day, they're going for a nice cold beer. Like 10 out of 10 times, for sure. And that's exactly how this played out. So marijuana stocks, they were a fad for a minute, and now they're dead. So what happened here was this stock, if you look at this chart, it says it's at a high of 520. It was never at 520. It was a high of 52. But knowing the rules with penny stocks, and I'll kind of talk about this for a second, in US dollars, when a stock is between $0 and $5, there is a 99.9% chance it will never break up past $5. The reason is institutions have lost interest. Institutions are the large corporations that really move share prices up and down. Well, they lose complete interest and confidence at that level. And when a stock is between $5 and $10 US dollars, it's a 90% chance it will never break out past 10. Same situation, institutions lose interest. So what happened here is this stock went from 52 down to, look at the share price today, $3.02. It was not $3.02, it was 30 cents. What they're trying to do here, sneaky devils, is they're trying to times it by 10, that's their stock split, to drive it up to that range so institutions grab a hold of it and drive it higher. Institutions are smarter than that. The leaders here at this company, they're not going to fool institutions, and they're not going to fool you and I. So the lesson learned here is whenever you see a stock split moving higher number to lower number, that's a great sign. But when they're moving from a lower number to a higher number, we will not be fooled. We're not going to dive into this. So they gave a little bit of an effort here to move that share price up into buying territory. But yeah, we're not going to fall for this one. This stock is not, I'm telling myself here, was never at $500 a share. That's ridiculous. It was at $50 a share at its highest, and it's currently at 30 cents today. Right now it's sitting at the 302 because of that 1-for-10 stock split. So again, when you see a stock split and it's moving from a higher number to a lower number, get excited. You're not going to get rich overnight, but you can see retail investors buying more, which is going to drive that share price up. But now if it goes from a lower number to a higher number, that's when you have a problem. Run the other way. In this case, CGC, better luck next time. If you guys like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to confidently invest on your own and avoid stocks like Canopy Growth, I invite you to join Tykr for free.